Major changes are officially hitting student loans. First, if you're on the SAVE plan, interest will resume on August 1st, 2025. While your payments may still be paused due to the court injunction, your balance will begin accruing interest again. And now that the big beautiful bill has passed, the SAVE plan is being eliminated altogether. You'll likely need to switch repayment plans in the near future. A new plan called RAP is expected to launch by July 1st, 2026. But RAP is stricter. It calculates payments on gross income, has a $10 minimum monthly payment even for $0 earners, and forgiveness only comes after 30 years of repayment. What should SAVE borrowers do? If you cannot afford to make payments and you switch plans, you can remain on the SAVE forbearance knowing that interest will accrue and your balance may grow. If you want to earn credit toward forgiveness and can't afford to make payments, consider switching over to IBR. If you borrowed before July 2026, you can stay on IBR even after the new law takes effect. That locks you into better forgiveness terms and potentially lower payments based on discretionary income. If you're already enrolled in IBR, ICR, or Payee, you can remain on your current plan for now. However, you will eventually need to transition into a new plan by June 2028. If you're pursuing PSLF, make sure you're in a qualifying plan. IBR still qualifies, and Parent Plus borrowers taking out loans after July 1st, 2026 will lose PSLF eligibility. If you're a Parent Plus borrower and haven't yet consolidated into a direct loan and enrolled in ICR, do it before July 1st, 2026. For borrowers facing hardship, deferment for economic hardship is ending. After July 2027, you'll only be able to pause through limited forbearance, just 9 months out of every 24, and interest keeps piling up. For borrowers in default, the bill slightly expands rehabilitation options. You can now rehabilitate a loan twice. You should take action quickly as wage garnishment is resuming. For Parent Plus borrowers, the news is tough. Your loans won't qualify for income-driven repayment or PSLF after July 1st, 2026, and lifetime borrowing is capped at $65,000. Consider consolidating and applying for ICR now while it's still available. If you are in ICR, you will be eligible for the new RAP plan. For future borrowers, new loans after July 2026 will have only 2 repayment options, the standard plan or RAP. Grad Plus loans are being eliminated. Borrowing limits are lower. Pell Grants will be harder to qualify for. If you're planning on grad school, factor this in now.